let's get this going. We got a lot to talk about today because the markets have opened dramatically lower. Looking at the Spiders weekly bar here, you can tell that this week now we form a weekly sell signal. I think this might be more prone to be the real deal. We are starting to see the rollover. As I got a deluge of emails, I'm sure you all have. Everyone is, I think, you know, Butch and I have been going over why it's important to look at the 4 top indices for a long time. I know I've been looking at, when I looked at the S&Ps, the NASDAQ, I looked at the Dow, the knife in the old days, the Kansas City value line. You looked at these broad-based markets. Many of you old-timers remember doing the S&P value line spread. We look at the Russell S&Ps for the January effect, the small cap. So we've been paying attention to those, but now it seems the cat's out of the bag. A lot of people are looking at that because just like myself, I just didn't see the actual turn coming in this market because we had too much strength in leadership in the NASDAQ, the Russell. Last week was really bizarre. We had a lot of sectors going down, yet we had a lot of sectors going up. Insurers of all things, property insurers, Chubb for an example, stock symbol CB. Some of the consumer discretionary stocks were not going down with the overall market. So we did have a perplexing mix environment in the equities markets. But today I think with the, you know, one of the concerns has always been for looking at the U.S. government. Are they going to, you know, bumble and kick the can down the road, make some kind of last-minute deal? Probably, because, you know, we don't want to sell the United States to China. If they come in and if they come in and we can't pay our debts and we have no money to run our government, I mean, everyone that owns our bonds, you know, you can't default on the world. That'll be a kind of a problem, right? I'm making a very drastic analysis. Anyway, what do I see for the week? I mean, this is this week's pattern that in the cash market, it left us a weekly sell signal, and we're going to probably gap lower. So the first thing in the Spiders that we're going to probably look at is a continuation down. But a gap here in this market, and this again, that was a weekly chart. Let's take a look at all the markets. This is a low closed doji. Just narrowly, look at the low, was 31.95.75, and we closed 31.93.75. So in hindsight, because this was Friday, but in fact, I think I sent out a tweet. As much as I tried, we need to, I think on Friday, I said we need to respect the October seasonal weakness in stock index. If we close today near 1689, we form a weekly at low closed doji bearish pattern in S&Ps. And sure enough, if you get the tweets, that's what was sent out, and we did. We also confirmed that low closed doji in the NASDAQ. Remember, my rule for a doji is 8% of the open-close relationship as it relates to the overall range. So the range here from 22 to 195, and looking at the open close, which was 22.25, you had three meager points, so you qualified as this weekly bar being a doji. So the NASDAQ is in a doji. Moving forward, we had not a low closed doji in the Russell. Now this is the TIF. This is the futures. I'm going to change the symbol to IWM. I want to look at the cash here. Looking at the cash, we just formed a doji last week. Now what finally I think might break the camel's back is that looking at the AD lines, we had bearish divergence created. We made newer highs, but we didn't with the AD line. And even though we're still above my moving average values, we had not many stocks participate in a 1, 2, 3 week rally. 3 weeks gave it a chance for more stocks to participate. That is a significant time frame. Again, weekly chart. So yes, we're back onto a bearish mode. It's the end of the quarter. You got some window dressing going on. Same pattern that concurs here with the New York Stock Exchange. And this is the one, the NYSE. The NYSE, I've always pointed out in all our weekly planning and scannings, and you can review the videos, that I said this is the one that is perplexing because it has developed a bearish divergence. So how do we trade this? That's the next question. Just to go over, and last but not least, let's look at the diamonds. And the diamonds have this kind of real ominous triple top here where, yes, while you made a newer high, you tried to test that high and you failed. So for me, very important levels to respect. There's little doubt in my mind that you're going to see an index price correction. There's little doubt in my mind. And these arrows tell the tale. The industrials have a significant downgrade or lack of participation with the advanced decline, and it came on very light, the little divergence there with the volume levels. So these two readings in the diamonds, and I've always said it's really perplexing that no one's going for high dividend yielding quality stocks. And of course, with the seasonal tendency of the market, Congress is coming back into town and they're going to play their little funky games. But I think overall, when we take a look at our next picture here, and we'll dissect what the strength or weakness of the overall market is, and we can kind of determine how much we can expect to go down, and if there is any rally strength in this market to look to sell rallies, or is this the time where we just got to take selling breakdowns? That's what I'm trying to discover and go through the information so we can say, all right, do I feel comfortable selling breakdowns? Because in the last week, selling breakdowns, you know, wasn't all that fruitful. Selling rallies, snapbacks. But as we all know, that sometimes we place orders for snapbacks into the moving averages and we don't get filled, right? So before we have, if we could, good morning, Rosemary. Rosemary says she has no audio. Audio is good. Rosemary, I hate to have you miss this. This is important. So audio is good. Hopefully we can get you corrected there. We are recording. Yes, we are. Okay, now, all right, so obviously, you know, I was looking at ahead, and as I was talking the other day and looking at the markets, this is an insurer. This is Chubb's. This is a monthly chart. Chubb is closing out on its, I mean, the whole insurer sector was doing quite strong last week. All right, let's take a look at this chart. This is kind of important. This is my, these are my pages. If you notice that I had all, you know, 6 of the top stock indices from daily to weekly. We looked at our on-balance volume with moving average settings, and we looked at advanced declines respective of each individual stock index with the moving averages over it. This is our planning and scanning page where we have a monthly chart with quarterly pivots. We have a weekly chart with monthly pivots. We have our on-balance volume with our moving average component. We have seasonal trend. Next chart. This is a daily chart with, we have weekly pivots. Then we have our on-balance volume with a moving average component, and then this is a relative strength chart, how this stock is doing compared to the S&P. When you see the red line go above the moving average, that means that this stock is outperforming the S&Ps. And if you believe in the theory that money chases positive money, then you want to look at buying sectors and stocks that is outperforming the overall market. So that's what this down here is all about, this spread chart. We've been doing, and as you can see my pages, we have relative strength spread charts. We'll go through that in just a minute. So let's take a look real quick and say, okay, what happened this past week? Many of you have already done this homework, but the funny thing is, last week, when we take a look, almost every sector was down except for the Baltic Dry Index, which was up, shipping. And we also had the banking sector. Regional bank index was up a little bit. And retail, XRT, the retail sector was up. So let's take a real close look is what I'm trying to say. First thing we want to look at is XLY. Why? Consumer discretionary sector. The consumer discretionary sector hasn't gone anywhere. It's formed 2 weeks of dojis back to back, but it did not move lower in association with the overall market. But these dojis, they're a concern. Those doji stars are a concern on a weekly basis. This pattern that I mentioned in our video the other night, we have this, I mean, it just was a very, if you guys watched it, the market had a big rally since August. We had a shallow pullback, and then we have this little up move. So we're either going to form a new leg to the upside, or a lot of these stocks, which it looks like today, are going to come back down. So it still looks to me as if the overall market, we might see some corrections in the indexes, but not all stock sectors are acting bearishly. So what we need to be alert for, if you're just a day trader, swing trader, if you're just looking at the S&Ps, to see if there's a lot of momentum to the downside. And I'm talking about the crash of 1987. I'm talking about the crash of 08. I'm talking about the end of the world. Do I see the end of the world correction in the market? And the answer is pure and simple, no. So it's not the type of environment where I would be saying, hey, this is the end of the world and we got to look at buying some deep out of the money puts, which is something I never say. Bank the farm, mortgage the house, sell the kids, you know, and buy deep out of the money because the end of the world is going. I do not, repeat, I do not see that. But I do see a correction in the market, and I think that going forward towards the end of the year for stock portfolio traders, for those that are trading stock, you want to be on the lookout for some decent stock trading opportunities. So I can also suggest that how we can measure that is by taking a look at some of the top sectors. So that's the consumer discretionary. This is the this is the industrial sector. And the industrial sector, I mean, one of the things that's, if you believe that volume, like I do, is the lifeblood of the market, there's some very strong participation with the industrial sector. We have had one big low close doji, two, the market really didn't do anything, 3, 4, 5, all this time, man, look at this big push. We're going to fill that gap today with another gap, and we got a gap down in here. But I mean, this market has had a sequence of rally, pullback, rally, and then we're going to have a pullback. So I think when we get that pullback, the answer here is probably in the XLI 4511. If I just drew a simple Simon Says trend line analysis into the market and just look at this little channel that we're developing, a longer term channel in the market, right? So it needs to have a little bit of correction. We probably will have a correction in the industrials. When we take a look at the XLB real quick, it's kind of the same thing. We got a little volume push over our moving average. Your volume had a huge push to the upside, and we are seeing a little correction in the material sector. So we'll probably see a little bit more downside here. So now let's take a look at technology, because that's the one that's really been acting the strongest, the longest. I mean, it really has. And from a seasonal perspective, you know, it's still going into kind of like its seasonal best time frame when we get through the first week of October. So, you know, this volume, we need to see a deeper correction. The next day or two is going to really tell us the tale of a lot of these sectors. And I have to tell you, folks, be careful about getting overly bearish and reading into the negative news right now, because we're just not seeing, at least what I'm showing you here, I'm not seeing a lot of really bad-looking longer-term charts, and I'm not talking about just the chart pattern. I'm talking about the volume, and I'm referring to the seasonality of the time of the marketplace. So again, this is healthcare. When do people get sick? In July and August when they go on vacation? No. A very bad stomach virus, intestinal virus, then like I did, you'll be could be visiting doctors a little bit. In any event, this is the time frame. Kids go back to school, kids get sick, blah, 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 blah. So healthcare, pharmaceutical sector, we start paying attention to buying opportunities in that field, okay? This is the XRT, which made a positive gain for the week, but it formed a doji. Seasonally, the retail sector goes down into November. So we've got some sectors that are weak, we've got some sectors that are strong, and we have overall stock indices that people want to sell the dickens out, and you got the people out there claiming it is the end of the world. So with that said, here's what I'm kind of looking at for us for this week. Let me save everything and move on for you. Okay, first off, euro currency. Well, actually, let me go back here and talk about our foreign counterparts real quick. All rising tides lift all boats. And since we started August, or the end of August, since we started September, we have a dramatic change in the performance of the markets, in the sense that Latin America was at the bottom of the heap, and it's at the top of the heap. And that's measured by the ILF. Germany was making new highs, the DAX. Italy was suffering, and it's come up. France was making newer highs, and emerging markets are now all, for the last month, outperforming the S&Ps, even Malaysia. So that's this month. So if we come back and we go, what about the last quarter? Where are we for the quarter, which is a lot different? And you might say, well, why is that important to me? I'm a day trader. Because if for the last 3 months, all right, since the beginning of July, here we go, all of a sudden, we've had a major turn of events in the marketplace from a perspective of who the leadership is. So if you're day trading, let me ask you a question. Number one, are you looking at the euro currency? Because if you're looking at the euro currency and you see the fact that Europe's stocks are doing better in this quarter than ours, look at this. Look at the 3 top stock indices. Italy, France, and Germany. How in the heck are they doing better than us? Okay? Emerging markets, that would be India. That would be Turkey. How are they doing better than us in the last quarter? These charts don't lie. You can go do your own research, but I've set these up so I can take a relative strength or comparative analysis and find out where do we stand versus the world. And so I think at this point in time, you know, is it because of Ben Bernanke pumping the money? Is it because people don't have the confidence in the U.S. economy? Is it they don't have confidence in the leadership? You know, everything was fine when Congress was on vacation. Congress comes back from vacation and the world says sell. Well, I'll be honest with you, I don't really buy that, because I think that we're such a globally tied entity that I'd say if everything was pointing down, then that's a different story. Leadership right now, friends, leadership in the last quarter. So you got 1, 2, 3, and today's the last day of the month, so this is kind of important stuff. Leadership in the marketplace is coming, believe it or not, in this little aqua color trend line, and that's materials, XLB. So materials, that means there must be some construction going on. Industrials is still leading the way in the quarter. So the 2 strongest sectors is industrials and materials still. Next we come up with consumer discretionary stocks, and then we have, as we get down here, as you can see, the whole list, the gamut, we've got healthcare here, and then finally the banking stocks. But I also want to focus on this little maroon thing, is energy, XLE. Because XLE, if we see a continued weakness and breakdown in energy, that's pretty good. And seasonally speaking, energy goes down. So I'm kind of building, and it might seem I'm going a roundabout way, but I'm looking at several different angles to come up with a conclusion for us that says, is this the time to get very, very, very bearish in the market, or is this the time to say, hey, maybe I just keep my powder dry and let the media and all the panic sellers dump, and then look for some buying opportunity in the next week to 10 days. And I'm looking for buying opportunities in the next week to 10 days. Unless things change dramatically, which I will tweet, I will talk about in this room, I will come out back on planning and scanning. But for right now, I think, the short term, looking at even the energy sectors, we see as this crack spread goes down, it shows crude oil weakens more than the products. And the crack spread is starting again, another little downtick here. So energy prices seasonally go down. We've broken some strong support. We see another thing here that's very interesting. Looking at the knob spread, if the stock market's going to crash, then by all means, we should see a lot better performance. Now, the other week we came in here, we said, hey, this knob spread is probably good for a point move in the bonds, and we got it. Now, I think that was last week, right? Was everyone here last week? Based on that knob spread, I said the bonds had underperformed the notes, and the bonds are probably good for about a point and a half rally to get this spread back into so-called line is what we were referring to. And so when I come into here and I look at these markets right now, and I say to myself, let's look at this performance here. And I say the bonds, this is this little, if you see pink, bonds are they've been starting to outperform. They've outperformed red, which is gold. They've outperformed brown, which is crude oil. And of course, gray is the yen. We always say that the yen and the bonds kind of track their performance or direction. They're very closely tied, correlated. And so we're seeing, and this is a zero line, so the performance. This goes back since the beginning of the month. So we have bonds starting to perk their heads up, but barely moving up. I would suspect if we have an equity market meltdown, then bonds are going to see quite a more dramatic move. So with that said, going from A to Z, here's my game plan. A, let's change over to our newsletter page. Give this a second. There's a lot of data on these charts. All right. So as you can see, the first thing that I'm going to be looking at, and as we gap higher on the bonds, we have no real follow through on the bond market. I mean, on a day like a gap lower with equities, you would imagine that we would see a big move in the bonds. I think that possibly over the course of the next maybe week, 2 weeks, if the bonds do get any upside, it's going to take maybe 2 or 3 weeks, and you could see a move to test this old level of support. All right, and that would be the area of resistance. Now, we got to get rid of the month and we got rid of the quarter. We got 2 new time frames that we're going to have to deal with here. So we'll see where this market closes today, but I think that bonds are still a relative, believe it or not, they can be bought. And I think they can be bought near 132.06 up to, say, 14 on any type of a pullback. Watch your daily supports. Okay? We got maybe, this is a weekly chart, so I'm talking between now and, the middle of the week. So you don't want to buy a pullback all the way down here on Friday. But I think that maybe 132, forget 06, I think today, tomorrow, 32.12 to 132.24 will give you maybe the first test of that support, a very important buy signal. And look for a good, important buying opportunity in bonds on that little pullback, okay? So that would be what I'd be looking for in bonds. As for S&Ps, last night's video, when we did yesterday's video, it was obviously well before the market had opened, so I got news for you. Scratch this little 90 I was talking about on the video. I don't think we'll see 90, but if we take a look at the daily pivot, the pivot point itself, which I really doubt we're going to see a market rally all the way back up here to 86. Your odds are likely maybe 78, 79, something like that. This is, I mean, just to almost completely fill the gap, so to speak. I don't think we get to 80, so keep that in mind. And as far as downside support today, I mean, we would have to get real over sold. It would be around this old swing high, and if we go to our longer term stuff, you'll notice that we don't have a whole lot of support in here on any time frame. 1661 is about the only pivot support that I've got in the market that corresponds with that level. So I can get rid of all this stuff here real quick. And I say for the week, watch 1660. It's an old swing high. It kept the market in check. We broke out. If you go back in time, you'll also notice 1660 is near these old swing highs. That'll be the first test of support. So maybe around 62, 64. It won't quite get there because too many people might be seeing the same thing I'm seeing. All right? Looking at the S&Ps, another thing is we want to track for this week is that volume. If we get this big sell-off in here and we don't get a huge sell-off in volume, and if we don't get a big pullback on that advanced decline, then we've got more work to do up here. All right? So the S&Ps, I've given you your support and resistance targets. I've given you support and resistance targets for the bonds. Gold. Let me talk about gold real quick because gold, oops, wrong chart. Okay, so for the gold market, we had this double bottom in the market. This first primary low, this secondary low, right? Then you come in and you form this little high closed doji. So, and then you have a daily buy signal. And you're kind of in a seasonally strong period of time till the end of, or the middle of October, excuse me. And you can't even break out and get back up to this high right here. So for the gold market, here's how I would be playing this. If this market sucked in longs at the top tonight, if it's sucked in longs, imagine what will happen if everyone has their stop underneath this low. The market's going to go down a little bit, right? So what would make sense? If on an intraday basis, meaning this particular day, today, what happens if so many people decide to buy back into gold? So you watch for closes or you look for the market to get back above this 1340 area today. If it got back above 1340 area today, you would form one long shadow and you want to be looking at some exposure to the long side in gold. Does that make sense, everybody? So as far as stocks are concerned, and I know the market just opened up, but as far as stocks are concerned, I think this is such an important planning and scanning session because it is the end of the month. It is the end of the quarter. And I think this is a very important crossroad for the marketplace in the U.S. economy, the global economy. I mean, I hate to tell you, until things really change, I'm still long-term bullish the equity markets, and as I wrote about in the mastering of the stock market last year, I think that we have been under so much pressure in the market to perform, and the equity market has not seen a big move. The market participation rate of the general public is not here. Believe it or not, I'm still longer-term bullish the equity markets, and there's still a lot of value in equities out there, folks. There's still a lot of really good deals in the marketplace. So longer term, at least for the holidays, I still like Coach. I still like some of the apparel stocks like Ralph Lauren, longer term. I still like Lorillard, LO. And I do like the pharmaceuticals, as I alluded to, because we enter that seasonally strong period of time. So we're going to get some cash ready. And I know that this week we'll probably do another special. We have to. There's just no doubt about it, because you just can't do a planning and scanning on a Monday when it's the end of the quarter and the end of the month, and you need to do your quarterly and monthly analysis to see how this stuff ends up. So we need to do a little bit more together and work together, and so I'm going to invite everybody. I think tomorrow would be an important day. I'm here. I got sleeves rolled up, and I'm looking to make some money with you guys together. So with that said, if that's all right for everybody, Rosemary asked if I'm looking for a 2-week bonds to go up, would I see ES then fading out in that same time frame? Yes, I think that's a decent analysis. I mean, if we have this week, think of this, Rosemary, the market doesn't go anywhere and the stocks go down a little bit or the indices go down, right? So one of the things that we got to do is we got to look at, and I'll share this with you. I have this on Genesis as well. But I mean, we do share this with everybody in planning and scanning. I don't know why I just didn't have enough time today. It was just too much to talk about. But we take a look at our retail sector, okay? This is all green. This means that this retail sector is in daily buy mode. Now today it'll go into a sell mode. But overall, we want to take a look at how a lot of these names are faring. I mean, you take a look at a Tesla, take a look at a Netflix, which is surprising, it's still over $300. Limited Brands, which is Victoria's Secrets. You know, there's a lot of really strong names out there, right? You take a look at a Bed Bath & Beyond. I mean, that stock, you know, everyone knows in this room it's my most hated company to visit, a store to visit. But down, then up, gapped up. I mean, this thing, it's just, how do you get bearish the overall market when you have a lot of names out there that are still acting bullishly? In fact, if people are so broke, why are company names like your Las Vegas casinos? And that's been like, you know, we're going to see, and obviously, you know, Friday they finally got some downside action in that. But let's watch and see how far down this stock goes. This thing was, you know, I mean, if consumers are tapped out and the economy's going to zero, you don't have that whole sector moving like it is. So yes, could we get a two-week, 3-week correction in the market? Yes. Does that mean stocks are going to go to zero? No. What it means is they might go down and they might just sit there and psychologically wear on everyone's psyche and think, oh, it's the crash. We need bearish news, we need bearish mentality, and we need to pay attention to the facts by looking at the interior or the market internal structure of the market and take a look at these names. And I think the important thing is to see how they end up today, which is the end of the month, the end of the quarter, and deal with this together. But for right now, the levels that I gave you for the stock market, for the day trading, for the E-minis, I mean, look at this. I don't even know if we're going to even get down to that 1660 area. So we will don't get too bearish in the hole, number one. And number two, I would say that if today, by chance, it's the first maybe test, as everyone, most professional traders know that you don't need to fill a gap 100% to consider the gap filled. It's 50%. But I think in this case, you might get, if you get the market making a new high up in here around 78, I'd be more willing to be a seller up there. Okay, so George Valle says, great tomorrow. I think there isn't a single soul in the world who wouldn't say, let's revisit this and see what's going on for tomorrow. So let's stop here, and tomorrow